Okay, hello everyone. Yeah, it was no sound because I had my mic on mute. So I'm sorry for that. So, okay, um, I will repeat. Okay, so um, we have been away last week. I was in Turkey for a few days. So, if anyone is from Turkey here, please let me know in the chat box. Uh, and also, obviously, if you are here for the first time with us, make sure to leave us a like, subscribe to our channel, leave us any comment below, and that with that kind of approach, obviously, you will support those free webinars that we normally do once per week. Someone says again, still no sound in YouTube. Someone says it's Czech from Czech Republic, so obviously sound is here. Okay, so perfect. So what's going on in the markets? As you know, I will cover plenty of markets, normally focus on the FX, also look at some of the single stocks. So stocks have recently seen very nice bounce to the upside, but still there is no clear if maybe Fed is going to stop the hiking rates, or maybe will they continue even with more aggressive policy. So I still think that stocks somehow could be very undecided here, especially when looking at the indexes. Keep in mind, just a second. Keep in mind that there was a new surprise from the RBA. From They lifted rates to 4.1%. The expectations was 3.85%. So it looks like that obviously inflation is still the real global problem. And with that kind of approach, when central banks are still very hawkish, of course, stocks can still face some limited upside. But of course, the US dollar recently has seen some very nice bounce based on this optimism regarding the US debt ceiling. But this is now behind. So obviously, there will be new events, new drivers of these prices. So before I go to some of the charts, I mean pairs, I want to bring attention to this overlay chart. Okay, at the top we have the S&P 500, then we have dollar index, then we have yields, dollar index and yields obviously move will in the same direction. Then you have here at the bottom some of the major dollar pairs. And why I'm bringing on this, because if you want to trade some of the dollar pairs, maybe you want to be long dollar, then obviously you want to look to trade long dollar versus very weak currencies, maybe such as euro, because the euro is one of the weakest. So if you want to be shorting the US dollar, then maybe you will try to focus on Aussie. And we sent out free article yesterday highlighting that Aussie has been very strong. It closed very strong last week with a very nice bounce, and with this RBA and inflation data that was reported last week, of course, we anticipated further strength on the Aussie, and looks like that Aussie could continue even higher. And I will be looking for potential longs after pullbacks, because I still think that this pullback lower on Aussie could unfold until the US dollar index will complete this current corrective recovery. So, long story short, if I want to be shorting the US dollar, I will focus on Aussie after pullbacks. If I want to be long the US dollar, then I will focus on shorts on euro dollar, because this one is the weakest. Now we will look at the wave structure on both of them. Okay, so here is euro dollar. Firstly, if I just remind you, we've been tracking this flat correction actually since mid-March, where when we were looking for this wave B rally, because this recovery was very overlapping. So that suggested back then that bulls are losing strength, because clearly that was very overlapping, very slow price action compared to the very previous strong impulsive characteristics here in this uptrend. So this is, in my opinion, still a corrective pose with an uptrend. I think that more gains will follow after this pullback, but this pullback so far is still incomplete. So as I said earlier, euro is very weak, and I think that if dollar index, dollar in general, will see more strength, then maybe shorting here in the short term towards after rallies towards this 105 levels still could be in the cards. Looking at the 4-hour chart, I'm waiting on this bounce to maybe to complete itself around 108 level to be a wave 4. Keep in mind that this was a very nice clean move to the downside, very extended lag. So I think it's a wave 3. And now if you think we are in a wave 4, then obviously I would focus on the 38.2%. And also that was the area here around 108 at this swing low. So maybe this will try to limit the upside here. Also, by the way, you had this former wave 4. So whenever you track wave 4, in either scenario, you will see that wave 4 correction will stop at the previous wave 4 of 1 lesser degree. So that's definitely a very interesting level for a new leg to the downside. So I will keep a close eye on this one. And of course, as I said, if I want to be long US dollar, I will be looking potentially for shorts here on the euro. Okay, but keep in mind that this is still only the short-term play of this weakness. As soon as we will approach 105 level, I will start considering that maybe we could be approaching the very big important support. So that was actually here was January 06. Okay, that was the starting point of the year, and we retested this once, and maybe we will do another time, but I would expect a failure break here to a new low below this January level. So it could euro could drop towards the new low of this year. But then, as you know, sentiment will again be extremely bearish if that happens for the euro, and that's when we should be aware and prepared that maybe something else is behind the corner, because we know that market moves from in sentiment from pessimism to optimism and vice versa. So that's what actually Elliott waves are all about. Okay, it's not just counting, labeling the waves here. You're actually with that waves, you're actually trying to define the sentiment. Okay, that's for euro. Now I said I will also take a look now on Aussie dollar. So on Aussie, we have seen a pretty nice aggressive bounce. Now, firstly, I want to look and pay attention to this daily chart. Notice that we came very deeply here from that highs, but notice that we stopped at the 78 to 61.8%. So we were looking for this wave C to stop somewhere in that area. And since this was respected quite well, and notice that market rallied all the way back above the previous swing lows here. Okay, so if you think that whenever you are, let's say, in a downtrend, okay, and you want that this downtrend will resume, what you want to see is that the previous low, when it's broken, will hold as a resistance. Okay, but now notice what is going on. Market made a very sharp rise, clearly in impulsive fashion, back above the previous swing low. Okay, so in my opinion, that's a very nice technical reversal and confirmed by the value wave principle, because I can count 5 waves up on a smaller time frame. Okay, so if dollar will continue maybe slightly higher, dollar index towards 105, which is our target, and 106 in that area, we think that upside could be limited. At the same time, maybe this Aussie will give us a chance for this pullback to join the recovery. Okay, so very nice support. I even have here hourly chart. Okay, so very nice support is around the former wave 4, here around 6580. I'm not really sure if we'll get towards this level, but what I would pay attention on if we get a little bit higher prices here for a wave 5 is maybe the support would be here, okay, around 6610, because that was actually a trigger when the RBA decided for this rate hike. Okay, so maybe this kind of a very strong levels are very important, because obviously some big orders showed up here and sent the prices higher, and if maybe the price will retrace back towards this area, that's again important price for where market could potentially find a new support. So either here or maybe slightly lower, but in either case, I think that the next pullback, whenever it unfolds, could be a very nice opportunity on the long side. Of course, the invalidation level based in Elliott wave terms should be at 64.59. Okay, so as long as this level holds, I think that more upside will occur. But of course, if you maybe want to play on the long side from better risk reward perspective, definitely you would welcome this pullback. But sometimes markets are very sharp, very strong, and you never get a pullback. But that's just something that we have to consider before you pull any trigger. Okay, so that's for Aussie. If you also, since I mentioned earlier, US dollar index, if I also make a correlation here with the US yield. So on the top we have the US yield. So again, I still think that this is a higher degree corrective phase. Even if, let's say that I'm wrong and these US yields will continue above these October highs, then maybe this move could come if Fed will just remain aggressively hawkish, or potentially if the stock market would collapse, then US dollar would maybe could potentially see more upside here because they are obviously in correlations. But I still think that even if the US yields would potentially see more gains, okay, I don't believe the dollar index will take this high out here from 2022. Notice that this was a pretty nice aggressive sell-off. So now I'm tracking this consolidation at the same time when I'm absorbing wave B. But even if I'm wrong and we see a new high here on the US yields, I just think the dollar index will still make a lower high, but potentially could see extension towards 108 to 110. Okay, but the first resistance now, how I look at the markets at the moment, is 105, 106 is resistance for dollar index. So potentially we are going to see here wave B triangle on the US yields, then more weakness. So obviously I will be expecting some similar cycles here for the next few months. Okay, so for now dollar still in a recovery mode, okay, for the last 2 months or so. But keep in mind that the higher degree trend, in my opinion, is still bearish, and we will expect more weakness after this ABC flat correction is finished. Now let's take a look also on dollar yen. So dollar yen is also obviously very important when it comes to the US yields. Markets are in tight correlations, but currently Japanese yen is doing quite well, especially maybe versus is not doing well, especially not versus Aussie, because you had recently pushed to the upside on stocks, and also Aussie is very strong because of the RBA rate decision. So whenever you trade this Japanese yen, just keep in mind that you have to pay attention to US yield and also the stock market, okay, and also BOG, of course. Now looking at this daily chart, we had a very nice move to the downside from these 2022 highs, and this is a counter trend movement. Very clear three waves recovery so far. It could be even counted as a WXY correction maybe, but still doesn't really change much. I still think that there is a very nice resistance going on around 50 to 61.8%. Maybe slightly more upside could be seen here, because if you look closely here on the intraday chart, I don't really think that that was an impulsive decline. Clearly, this is ongoing correction in my opinion, so I will be looking for more upside. So very nice, very important resistance could be around 142. I'm just wondering where maybe dollar index will be trading at the same time, maybe already will try to complete that wave C rally of a flat, and that's when all of the markets could face resistance at the same time. Okay, so dollar yen still bullish, but just keep in mind that by the end of the year, I think that we will see a major reversal lower. We will see if maybe Bank of Japan will be the catalyst, maybe lower US yields, who knows, maybe even drop on stocks, but then even dollar would see some recovery. So maybe this could be a little bit more tricky to trade in risk-off environment. But still, when I look at this price action, I just think that this one is not far away from a resistance. Now we have Bank of Canada decision. I think it's tomorrow. Their hawkish expectations. So this could be quite interesting because we have a crude oil also turning to the upside. So maybe this could support even more cat if crude oil will stay in uptrend. Now, if you recall, we were looking for this crude oil potential correction within uptrend. It was very, very tricky to follow some of the recent intraday structures, but still it found the support at the 61.8%. Then we gapped higher. We had some new production cuts announcement this weekend, so obviously prices gapped higher and then filled the gap. Now, what would I pay attention on to make sure maybe if uptrend will resume or no is just keep an eye on this 72.24. Okay, this could be still an ABC drop. So if we overlap this level, then this current drop would not be in 5 waves as a bearish pattern. Okay, because if you will get 5 waves down, then you know that market is back in bearish mode. But if this overlap will be seen, then this drop would be confirmed as a counter trend movement, and then obviously we could expect more upside. So if we rally today and let's say we close somewhere around 73, then I think that crude oil will see more upside while we trade above that level. Okay, then I would dare to look even towards 77, maybe even higher in weeks ahead. Okay, but if you see 5 waves down, then I think that the whole correction, then the whole move from May lows is correction, and unfortunately then we will revisit this level. Now let me take a look on the S&P 500. Now these indexes have seen some of them have seen very nice move to the upside, but my concern is that maybe some of major single stocks are the main drivers of these indexes. Okay, I'm not really sure. I planned to look earlier before I started the webinar to check where all of those stocks that are in the S&P 500 are currently trading. Are more than maybe 70-80% above 50 day moving averages, or are just a few stocks above that. This is something that we have to consider. Keep in mind that some of technology stocks have made a very nice, impressive move to the upside. So if those technology single stocks will make a pullback, then even, as you know, Nasdaq 100 will see a massive reversal. But still, looking at here at okay, I will delete this because that's not correct. Okay, now here on the S&P 500 daily chart, we either completed here wave 2 or maybe even wave B, or potentially this might have been some kind of a triangle. But what I'm trying to focus now is on the recovery from March lows. Okay, and you will see that I can count potentially 5 waves up here. However, these 5 waves up not maybe really finished yet, because let me try to mark this a little bit better. Okay, so that was wave 1, extended wave 3, wave 4 flat, and if we think that this was the area of a completed wave 4, then a new 5-wave rise can be now in progress. So maybe more upside could be seen. I'm really curious to see what will happen if we drop towards this wave 1 area. Then this overlap would definitely indicate that maybe bears are losing strength and that we will see a new correction. However, for now, we will stick with the higher targets for a fifth wave towards the 61.8%, which is actually from this wave 3 distance measured from end of wave 4. So that would be our upward objection potentially for this week. And the reason is also because we have a pretty nice bullish structure in some of other indexes. I mean, here, if you look at the Dow Jones, you can clearly see that we have, and by the way, we shared this one a lot in our past webinars. And so far, as you know, we identify this as a counter trend movement, then a nice 5 waves up, and another counter trend movement. So whenever you have this kind of activity, then clearly you can expect more upside. Yes, maybe we will still see some resistance later on, but that should be then from higher prices. So I think that still we could, in the next few weeks, months, maybe during summer, we could retest these levels. Okay, for now this looks like a very nice, beautiful pattern suggesting more upside while we are trading above that level. But the real invalidation level should be here, because if this somehow becomes some kind of a triangle, then this 31,430 should stay untouched. Okay, so I think that this one also suggests that more gains here and could potentially also keep the S&P 500 in uptrend as well. But not all of the markets, obviously, indexes are in the perfect correlations, not at all. Okay. Now, if we look at, as I promised, some of the single stocks. So here we have Apple. Apple has recently, as you know, yesterday has reached a new high, but notice that we reached a new all-time high. We are reversing, and there was a lot of optimism after announcement of these new products from Apple, Vision Pro headset, new iOS 17, and I think new MacBook or something. So whenever this kind of a, as you know, you will always get very good news in a bull market, but you should be aware of optimism that moves maybe into late stages whenever the price at the same time is trading a new all-time highs. Okay, I'm not saying that we will see a major top here, but I would not be surprised if we see a new pullback. Okay, now if you look here closely, then I can clearly count potentially waves 1, 2, 3 to the upside. Maybe watch out for this wave 4 if you want to join this recovery and then try to catch the upside here. Okay, so watch out for this next pullback. Definitely this all-time highs, this is always very important resistance, and it's already visible because of this reversal that we have seen recently. Okay, so whenever someone wants to join the uptrend, I suggest just to wait on this next pullback in a wave 4. So if we just maybe assume that this could be end of a wave 3, I'm not really sure because we don't have enough of price data, then maybe try to use this wave 2 as a distance as a potential projection for a wave 4. And notice that this comes in around the previous area here. And also, as I can see it right now, let me label this. Also, you had here, this was actually the lower side of this gap when we got these earnings back. That was back on May 4. So this could be a pretty nice, interesting support zone right there. Okay. So that's the levels we could potentially focus on if we see this pullback from the current prices. If this wave 3 will just extend higher, then obviously these levels will change, and the next support could be at these highs. Okay, but for now, definitely this is still an uptrend and it's incomplete, and we'll see more upside. But as I said, just be aware of this fourth wave retracement. Okay, now let me take a look also at Tesla. Okay, so we also had an analysis before on this one. As you know, we've been tracking this corrective pullback. We also shared this on Twitter plenty of times. So it was a pretty straightforward, very nice, clear Elliott wave patterns. And these are the patterns that, if you're interested in Elliott wave principle, these are the patterns that we should normally focus on. Okay, the patterns that are very clear and don't have a lot of different possibilities to label the wave structure. Okay, because clearly that was a very strong and sharp move from a new low, and then the counter-trend movement has been made by 3 waves. Okay, now you also have this broken trend line, so clearly this correction that we expected has been already fully retraced. So maybe there is room for more upside, but again, after pullbacks, just be aware, just keep in mind that it's not easy again to jump into the market at these levels. You want to see some kind of a pullback first. If you look a little bit closely here, maybe that was wave 3 or 3. So again, watching pullbacks and then join the uptrend could make sense. Okay, but overall, this appears to be a very nice bullish structure, and I still think that is incomplete. Also, I think that I prepared AMD. Let me take a look here. New Zealand versus Japanese yen. Okay, we can take a look. No problem. Okay, so MD also bullish, maybe trying to come back into this gap. will try to fill it around 110 could be the very nice next support for a new push to the upside, okay, for a new continuation higher. So clearly we are bullish. Let's say as long we are trading above 100 round figure, I think that this market is still in this recovery, but break below that level could potentially signal temporary pause here of this uptrend. Now let's take a look also on Bitcoin. So as you know, cryptos have seen move to the downside after US regulators decided to sue Binance because on this some fraudulent activities. Earlier, I just heard, I'm not sure if that's true, that they have been working with no licenses and they haven't been registered as a broker since 2019. So that's pretty not actually, it's not looking good for cryptos in general, obviously, because if they don't have a license, which are quite big exchange, one of the biggest, then obviously I'm not sure what this means for other exchanges. Maybe they will have the same issues, but still looking at Bitcoin in general, we have two wave counts now. The first one is that this is 5-wave movement and you are now in a corrective phase. We've been tracking this corrective phase for a while. Now, very nice technical support clearly could be seen around 25,000. You have the previous swing highs. So if that was the breakout, then I want to see this level to hold as a support. Also, this fifth wave within this first leg of an impulse was pretty extended. Okay, so whenever that happens, the pullback can find the support at the starting point of a wave 4 rather than ending point. The ending point was around 20,000. Okay, so the starting point was here 24, maybe even 25 if you just adjust a little bit the wave counts here. So that's the area that we should stay focused on. If we see a rally from there in 5 waves, then we know that this market is back in bullish mode. But for now, even if I'm counting this as a WXY and you are now in a second zigzag, still this could easily be a new 5-wave drop from that 2850. Okay, sorry, 28,500 from that highs. Okay, so just keep in mind that maybe supports may not be so close as we think, but we will know this by the market. So if the market will rally away from the lower side of this channel in 5 waves, then you know what's happening and you will have enough data potentially to make even some decisions on the long side, because you will exactly know where to place your stops. But for now, it's still a little bit tricky and dangerous. We don't know what will unfold for this story for the week, and maybe this, as you know, whenever we have these big events going on, this could take time and time to unfold, to finally unfold, and maybe this will keep cryptos a little bit tricky over the next few months. Also, looking at the Ethereum, again, trying to count this as a counter trend movement. Very nice trend line support comes in around 1700. I've been repeating about this price already weeks back, that this is the next very big level. So it still can be retested if maybe this is going to be a triangle in a wave B within a deeper wave 4, or if we'll just stay in the range here, could be even a bullish triangle. But still, in either case, I think that this correction is still incomplete and that there will be either more sideways or even deeper price action. Okay, so again, it's not time to look for any kind of opportunity here from my eyes. Okay. Also, someone asked for New Zealand dollar versus Japanese yen. Okay, so this one. Okay, so this one is clearly moving sideways. Okay, so I'll just try to explain this as simple as possible. So this pair is moving sideways, but if you look a little bit back, you can see still that market is in uptrend, okay, away from 2020 lows. So we have higher highs, higher swing lows, and now at the top you have a consolidation. So in my opinion, this type of a price action suggests that this uptrend is incomplete. So I'm looking for this to be a triangle. Triangle is formed by A, B, C, D, E subwaves, and each leg should be made by 3 waves, should have some kind of a corrective look, but one of them is normally very complex, one of them is very sharp. But since we have this wave C a little bit more complex, wave A very sharp, I think that wave E could be a little bit more simple with a simple structure. So we are expecting an ABC drop, potentially even all the way towards the lower side of this triangle range before market may stabilize. So unfortunately, we are now just in the middle of this very big range, nothing really special until I see these lows forming for a wave E. So if we see a drop towards 82 or maybe even 81 area, then I would observe potential bullish cases here. Of course, that should be confirmed by some impulsive structures on a smaller time frames. But for now, it looks like that it can continue lower in the short term. Looking at the 4-hour chart here, so maybe that was wave A, and you're around in the middle of wave B. Very nice resistance could be around here. 85 has already been retested. I think a little bit more upside. 86 area also. You can clearly see that this could be even some kind of a head and shoulders top formation. So again, I think that more downside here could be seen. Okay. Okay, traders, unfortunately, time has passed, so I will leave you here. If you have any more questions, any more requests, please maybe next time let me know a little bit earlier, or I will take the notes, or either contact me on Twitter, and I will make sure to prepare some of the charts for you for this webinar for your requests. So once again, thank you for your attention. If you were with us for the first time, make sure to like, to subscribe to our channels. If you're watching this on TradingView, also leave us some kind of a commentary there, and see you next week. Okay? Trade well, be careful, trade small. Have a good day. Bye.